Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Hello, everybody, and welcome back to another fantastic episode of Fintech Daydreaming. And this time is going to be just as good as all of the others, if not better. We've got with us a fantastic guest, but before we get there, as always, I need to bring in my fantastic co-host, Ville. How are you, my friend?
Good as always. How about you, Paul?
I'm really good. I'm really good. And I can see you're in a slightly different location this time. So you're out and about yet again, traveling.
Yeah, well, not traveling, unless you include travel, kind of taking 20 kilometers to the east from where you live. But yeah, so we're starting to get more and more meetings with customers, actual physical three-dimensional meetings. And in this case, I had the chance to record this episode now just before I'm going to meet a customer of ours. So yeah, it's we're kind of getting back to normal, like we've been saying for a while now.
I'm going to say I'm jealous, Ville. I've been sitting at home for way too long, and before the whole COVID thing, I was traveling every week. I've got withdrawal symptoms from airport lounges. I never thought I'd say this, but I'm desperate to get back into an airport lounge and onto a plane and have the ability again to complain about having to travel too much. But one of the people who have been focused on traveling, talking to banks all around the world, and is revered as a industry thought leader is Likhit, who's with us here today. So Likhit, welcome to the show. It's fantastic to have you with us here today. We're going to have a great discussion around what's happening at the board level at banks. But before we get into that, it might actually be nice for the few people out there who haven't come across your name so far to just get to know who's Likhit. So maybe you want to share a quick intro on yourself to our listeners.
Hey, thanks very much, Paul and Ville. I'm delighted. It's a real pleasure to join your podcast. I've kind of heard a number of the episodes before, and you guys do a fantastic job, right? So thank you so much for having me. Just keeping the introductions very short. I lead IBM's banking industry, so I'm the general manager for our banking and capital markets business globally, based out of Manhattan at the moment. And kind of got here a couple of years ago, just as the shutters were coming down for COVID. So it's been a fascinating experience being in New York for 2 years, but like you were saying, Paul, pretty much confined, as it were, to an apartment. So quite different from what I was expecting when I kind of took this on. But it's a great pleasure to be with you guys.
Fantastic. I'm just wondering, Likhit, how long have you been engaged in the banking industry? Has it been all of your career?
Yeah, I mean, it has pretty much. So I started off, Paul, at Pricewaterhouse, many years ago. And at the time, they didn't have a corporate finance business. So I was seconded to Rothschild. So I worked in London in the Rothschild's investment bank for 2 or 3 years. I then came back to Pricewaterhouse in their corporate finance business, which was essentially an investment bank, right? It was the accounting part of an investment bank, so I was involved in a lot of M&A activity. I kind of ultimately ran Pricewaterhouse's M&A business in the UK. And then when IBM acquired that business, I've then done various things with the banking industry, ultimately getting into a number of industry leadership roles. And I think the fascinating thing has been it's been across different geographies, right? So it's been in Europe. It's been in Asia Pacific, and now it's been in the Americas, actually. So it's been, some contrasting experiences.
That actually leads me to a really interesting discussion. I mean, we keep talking about disruption across the banking industry, but we also talk about the differences between the different geographies when it comes to banking. Payments, for instance, being a lot more advanced in Asia Pacific than it is in the US. And also digital banking being very advanced for us here in the Nordics as another great example. I'm wondering, from your sort of global view and experience, Likhit, how would you define the differences between banking in the different regions?
So I think it's really been the level of threat that the banks perceive or see from the agents of disruption. So what to me was fascinating when I first got to Singapore for taking responsibility for our Asia Pacific business, that it wasn't just the senior executives at DBS, it was every single bank that I went across, whether that was in Singapore, whether it was in the other ASEAN countries, whether it was in India. The thing that they said to you right off the bat was what's keeping them awake at night was actually the disruption being affected by at the time there wasn't that phrase around, but what they were talking about was the tech fins. And the companies that they were particularly worried about was Alibaba and Tencent. And they could see vast swathes of that business, whether that was in payments, but it was rapidly getting beyond payments, being lost to those particular disruptors, right? And what they saw in their minds was, at best, this was going to be a situation where, their customers were only going to come to them to ask for a price, and were only going to do business with the bank if that price was cheaper than what the tech fin was offering, in which case, it was a real race down to the bottom. They started to become commodity players, and that was going to be at best, right? At worst, what they started to see was that this could be Kodak moments for them, right? Where, vast chunks of their business just completely disappeared. So I think it was really that threat that truly galvanized a number of the banks in that region to start to respond to what they were seeing. I think what was fascinating, if I just kind of complete that a little bit, was the response and the reaction that I got, say, in Australia from senior executives in Australia was quite different. Because in Australia, you didn't have the same level of threat. And one of the reasons for that is because, companies like Alibaba didn't really see the opportunity in countries like Australia, which had much smaller populations than, say, countries like India or Indonesia, right? They were really attacking those countries which had very large populations. They were kind of less interested in countries like Australia. And I've seen that in the West as well, right? So when I kind of came to the US a couple of years ago, I was again kind of fascinated that the incumbent US banks were not taking the threat from the tech fins particularly highly. And it is also fascinating that players like Google and others who have entered the market big time, Google Pay is now probably the biggest player, right, in India from a payments perspective. WhatsApp is making a big effort to get into that business as well. I mean, I just saw in the press today, they're asking for the limit to be increased by the government so they can deal with more than 20 million customers, right? So they're actually really taking it seriously. But if you look at these folks in the US, they're not really in the financial services business particularly, right? Google tried to do it. They seem to be retreating from that particular business. So that threat didn't exist, right? But what has happened as a result of the pandemic and the digitization of experience that's taken place in the pandemic is, the likes of PayPal and Square and Stripe are again doing exactly the same that Alibaba was doing, right? Yeah. Which is they're taking vast chunks of that business away from the incumbent banks. This is why I think you're getting folks like Jamie Dimon suddenly starting to talk about the threat from the fintechs, right? And recognizing, but this is another thing we should talk about a little bit, that regulation is not necessarily a moat that is going to keep, as it were, these disruptors out, right?
No, it's not. No, you're absolutely right. I actually remember in the very, very early days of open banking, PSD2, when that came along, talking to one of the banks in the Northern Europe region. I don't want to get too specific, just to keep the names of the individuals hidden, but we got into a very interesting discussion where they were talking about the disruption that they were believing they were going to get from the fintechs, particularly around PSD2 and open banking. And I kept saying to them, but what about the big techs? What about the big platforms? Don't you see them as a risk? And there was a sort of resounding answer that came back of, nah, they never want to be banks. They don't want banking licenses. They're not a threat to us at all. Like I kept saying to them, they don't need a license. They just need to embed banking capabilities into their platforms and they'll start eating your breakfast. And they never really got it. But it sounds like what you're saying, Likhit, that has been a trend that's moving across the world now, and we can see it to a certain degree, right?
Oh, absolutely, Pearl. And I'd kind of go back to the experience with Alibaba specifically, right? When Alibaba first got into this many years ago, and they essentially had a trading platform that was enabling small and medium enterprise to trade on that particular platform. And at the time, I remember, because it was it was one of our bigger Chinese banking clients, right? Again, I wouldn't like to name the bank, but it was one of the biggest banks in China. Entered into a joint venture with Alibaba for exactly the reason that you were articulating, right? Because they didn't want to, or they didn't really perceive the need to get into the banking business. They were doing that trading activity. They wanted a bank that would provide the the banking capabilities, right, around things like working capital facilities and short-term lending, etc. But it didn't even take 6 months, right? Within 6 months, Alibaba recognized that three things were happening, Pat. One was they recognized that they were leaving money on the table if they had that joint venture arrangement where the financial services aspect of the profitability actually flowed to the bank rather than remaining within Alibaba. That was one driver. I think a much more important driver was they really, and we should talk about this a little bit more, right? They really saw the opportunity around data. And they recognized very fast that they were seeing trading patterns on that platform. They could draw insights from those trading platform, and they could do a lot of other things on the back of that, right? If the financial services aspects of dealing with those insights was in effect provided to the joint venture partner, they felt that firstly that bank was moving too slowly to take any advantage of those insights and not really prepared to make the investment in taking advantage of those insights. So too slowly and sticking to what was a very conventional, I'm going to deal with you within the kind of very narrow remit of financial services, right? Which again was not what the SME businesses actually required. They needed a much broader service, right? So that was the kind of second aspect of it. So they broke the joint venture, right? Broke the joint venture within 6 months. They set up their own bank. They kind of got on with it. I think the other point I would also make, right, and this is where it's a little bit of a fallacy, right? People turn around and say, well, these folks have been very, very successful because the regulatory regimes in this countries are significantly less onerous than what we see in the West, right? In Europe or in the US. That's a complete fallacy, right? I mean, if you look at the regulatory regimes in India or Singapore or China, if anything, they're more onerous than the regulatory regimes that we've got here, right? But what these technology companies have done is they've had two very simple rules. One is, they stay outside of the areas of the banking business that are really subject to regulation. And if you really look at it, there are only two areas, right? It's when you take a deposit from an individual where you're suddenly subject to extensive regulation, or where you're a fiduciary duty, right? If you're in something like wealth management where you're providing advice, again, there's a huge amount of regulation for you to be able to demonstrate that that advice took the customer's circumstances into account. Outside of that, regulation is not that onerous. So that's kind of one side of it, right? They stay outside. If you look at it, a lot of them have stayed outside the deposit taking business, right? They haven't got in there because it's heavily regulated. But the other thing which is really very, the other thing which is very interesting as far as this whole kind of regulatory piece is concerned, they've also stayed outside of businesses where you've got to put capital aside, right? I mean, this is where the whole Alibaba versus Chinese regulators has come to bear, right? Because their fundamental business has not required the putting aside of capital. That is why their returns on equity are so high. Now, what the Chinese regulator twigged was, look, you're becoming a systemically risky organization. You're so big, and you're dealing with so much of the payments system, for instance, within the country, you're systemically risky. Now, I do really need to think about whether you need to put capital aside to be able to deal with that particular issue, right? So those are the two things. They've been very smart about, which element of the business they get involved in. So the regulatory regime, as I was saying earlier on, is a little bit lighter. And then the other side of it is you don't have to put capital aside, so returns on equity look amazing, right?
Yeah, it's that whole notion between fractional reserve banking and full reserve banking as well, right? But
Correct.
Ville, you were about to say something.
Yeah, I was about to double click on one of the things that you were discussing here, which is, especially from a banking perspective, a bit of a curious thing, which is that it's this narrow scope services from multiple sources versus kind of broad scope services becoming like one of these super apps, if you will, for financial services. A lot of the examples you mentioned, PayPal, Alibaba especially, they are super apps, and I would actually include Revolut almost, at least having ambitions to be one in European scope at the very least. Now, I think we're kind of hearing two separate things, and I'd like to get your opinion on this, which is that we're constantly hearing that banks should become platforms, should become enablers of services from parties that maybe do a narrow segment really well of certain customer segment, or maybe some particular service. And at the same time, we're hearing these stories of these super apps emerging. Everybody's saying that, of course, a broad scope of services from a single source is the correct answer. How do you reconcile between these two different views of the banking world?
So I think, and we do have a reasonably strong point of view here, right? In terms of the discussions that we're having with a number of boards, and this is kind of global, right? As I said, it's initially in Asia Pacific, but we're having a number of these sorts of discussions in Latin America as well now, and really the choice that we're debating extensively with banking boards is, do you want to be a participant in somebody else's ecosystem, or do you actually want to be an orchestrator of those ecosystems? And I think when you look at participant, it becomes obvious quite quickly that as a participant, a bank, even initially, is going to find it very difficult to differentiate themselves on anything other than price. And therefore, like we were saying earlier on, if you're a very large scale player and you can actually manufacture financial services products extremely cheaply, then I think there is an opportunity for you to get in there and really benefit from volumes and get the increase in volumes to compensate for the fact that the margins you're going to earn on every transaction are going to be much lower than otherwise, right? But if you're not in that kind of position, if you're looking at cost income ratios that are more traditional within the industry, then I think all it's really going to do for you is some volumes, but very low margins, and not compensated for by reductions in cost, and therefore you're going to start to see a real adverse impact as far as the bottom line is concerned, right? So that, and we do strongly see, having seen some of these examples like that Alibaba one that I was talking about, that a number of these things are going to be evolutions, right? Where the orchestrators of those ecosystems are quite happy to have banks participating in the initial instance, but they're going to very rapidly recognize, well, why do I need a bank to do this, right? Why can't I go away and do this myself? Because like I was saying earlier on, the activities that they're involved with are not, activities that are the more onerous parts of what makes getting a banking license or maintaining a banking license complicated, right? So that's kind of one side of it. Whereas on the other side of it, what we're saying, particularly for the larger banks who've got major presence and major market share, right? We're kind of saying to them, but why don't you actually orchestrate these ecosystems? And technologically, you can set up platforms very easily to be able to bring those ecosystems, those partners onto those platforms. I mean, I'll just give you an example, right? I mean, one of the banks in India, State Bank of India, that's become this kind of orchestrator through the Yono platform, they're able to bring a new partner. So if they sign up a new merchant for their life cycle platform, they're able to bring that merchant onto the platform in less than 15 minutes. So this isn't a complex thing, and they're really not looking to do anything very sophisticated. It's actually just enabling enabling a customer to come onto the Yono platform and then go to whichever merchant is going to satisfy their need. And I think Ville, at the core of this, what they're looking at is, how do I satisfy the end-to-end requirement that the customer has, and put together an ecosystem that's going to make that happen. So for instance, if I want to go on holiday, there's a whole range of things I need to be doing, right? Going from deciding where I'm going to go, how am I going to get there, booking my flights, booking my hotel, planning my itinerary, all of that. Now, I think if you can create an ecosystem that brings together all of those different things, in a format that you called a super app, then customers come to the super app because it satisfies their overall need, right? Going back to that Yono example, people are coming to the Yono platform because it satisfies the overall need. Last 18, 24 months, they've added 40 million new customers, right? There ain't a lot of other digital developments in the banking industry that's been able to add 40 million new customers in that period of time. And not only that, those particular customers only get the benefits of the deals that SBI has done with these merchants, like special discounts and what have you, if they use an SBI financial services product. So it's got 40 million customers, and then it's also driving substantial increases in revenue for SBI, because customers are coming to the platform, not because it's a bank, but once they've gone to the platform and they want to use the deal that's being, take advantage of the deal that's being negotiated, they use an SBI financial services product. So it's a pretty neat arrangement that's been very successful.
Yeah, I think just to kind of cap off on that topic, I think this is interesting that you can almost see these kind of regulatory compliance tiers, if you will, because if you are like a fully compliant financial institution, let alone a bank, everything you do is looked through the lens of risk management and operational controls on everything, and that automatically slows you down. Now the question becomes, can you isolate that regulatory compliance and risk averse environment and then build something that is faster to develop behind almost like some kind of a firewall?
So great. Ville, that's a great point, right? Because again, going back to the way in which SBI looked at this, right? They looked at a whole range of, it was almost 100+ customer journeys that were going to support these particular platforms, right? And on each particular customer journey, their objective was, they set up a kind of overriding objective where they basically said, I need to be able to go, if this journey normally takes 40 steps or 45 steps, I want to be able to go from 45 steps down to 4. Every journey must have no more than 4 steps. And those 4 steps needs to include the regulatory and the security, steps that are a part of that particular journey, right? And we used garages to actually make this happen. Some of them were pretty complex, right? It took a long time to be able to kind of work out how you were going to go there, but there was no choice. The CEO of the bank had basically turned around and said that was absolute an edict. We're not going to make any exceptions from that at all. And therefore, their journeys do incorporate the regulatory elements, but it is within the context of those 4 steps, right? I think this is an area though, which is probably open to quite a lot more transformation, right? The whole regulatory security processes still, remain stuck as, if I could call it, they're stuck in the dark ages, right? I mean, these are the ones that, just as the fintechs have, looked at other elements to make them much more convenient. I think this is going to be one of those areas which is probably going to get attacked quite soon, right?
There's actually 2 points there that I'd like to labor on a little bit more that you mentioned, Likhit, right? And I think when we look at the growth of these platforms, there are 2 fundamental things that I see. One is, consumers these days don't want to do conscious banking anymore. I mean, no one wants to make appointments at the bank and do banking. They want banking to happen. And as you implement all of this, like you said, 4 steps to get from beginning to end on any activity, the banking becomes, unconsciously included in that process. It's not something that you consciously have to do anymore. The other thing as well is if we look at the journey that the fintechs have been on for the last couple of years, what they've done is very much like you said, Ville, they focused in on one specific narrow use case and said, we can do better than the banks. And then they've implemented a fantastic user experience across that very thin slither of a banking capability, where in reality, as consumers, as individuals, we are dependent on multiple different banking capabilities to be able to live our financial lives. The drawback of what the fintechs have done is basically just proliferate your device, your mobile phone, with a multitude of apps that give you great experiences, but in thin slivers where you have to jump from app to app to app to really manage your financial life. That is, that's horribly conscious banking in reality. So when you then move all of that back into a super app or a platform or an ecosystem capability where, things have been narrowed down to execute a process in 4 steps, you bring everything back together again. And I think that is going to be one of the fundamental drivers for why the future of banking will be based on platforms, because that's where the consumers want everything to go. Give me the simplicity, hide the banking capabilities, and make it as easy for me as possible to live my life.
It's very well said, Paul. And the analogy that I kind of like sharing with our clients in this particular space is, what's happened, for instance, in the pharmaceutical industry almost 25, 30 years ago, right? Companies like Pfizer, in fact, it was Pfizer at the time that took the lead, right? I mean, they recognized quite a long time ago that innovation in the pharmaceutical industry was actually coming from the biotechnology companies. It was coming at the time actually from universities. So they focused much more on creating a state-of-the-art, world-class distribution capability. And they then forged partnerships with these universities so that the universities really brought compounds to them because they knew the chances of those compounds becoming blockbuster billion-dollar products was going to be more likely with somebody like Pfizer who had invested in that distribution capability worldwide. I mean, even today, like you just look at what's happened with the coronavirus, right? The vaccines have all been collaborations between small biotechnology companies and the big pharma companies, right? The actual compound has been developed by the very small university like Oxford, for instance, for AstraZeneca, or the biotechnology companies for Pfizer, right? I think that's what's happening in banking as well. The smarter banks, let's take some examples, right? I mean, folks like Commonwealth Bank of Australia or BBVA that were out there buying a lot of fintechs have now moved very rapidly away from there, right? And their strategy now is very much around how do I collaborate and how do I create platforms which have got API structures that enable me to bring on board these fintechs very, very rapidly, right? And how do I set up, they're increasingly looking at how do I set up regulatory environments, which means that bringing on a fintech is something that I can do in hours and days, and I don't have to take 6 months to making sure that that particular fintech meets my bank's policies and so on, right? So it's all about, we could go so far as to say, I mean, it's a little bit provocative, right? But we could go so far as to saying, look, the innovation engine for the banking industry is going to be the fintechs.
Yeah.
Right. And the banks that are very smart about recognizing that and collaborating with those fintechs in a really systematic way are the ones that are already demonstrating that they're going to be the winners, right? I think what we've got to worry about though is more the tech fins. So when some of those fintechs have moved on because they really exploited the narrow thing you were describing, Paul, to becoming unicorns, right? I mean, you look at the likes of Klarna, you look at the likes of Revolut, you look at the likes of Afterpay. These organizations are now becoming too big to be ones where they're purely going to be prepared to collaborate in the kind of way that I'm describing, right? And those are the guys that are, starting to wipe out the business. But what we could talk about a little bit, because I'm very optimistic about all of this, Pal and Ville, based on the experience in Asia. I think, where banks have taken on this threat, they've been very successful. So maybe we could talk about that a little bit, right?
Absolutely. It actually leads me into another question. We've been, for years, talking about the Kodak moment for the banks, right? Okay. We've been talking extensively about disruption is coming. It was either fintechs, big techs, one thing or another. I think we can all agree there is fundamental disruption happening in the banking industry, and generally for all of it for the better. But do we really think that the banks are going to hit a Kodak moment? Do we think that there's going to be a Kodak moment? And how are the banks actually really now adapting on this?
So I think Paul, I would hypothesize that, unless there is, real accelerated transformation in the industry, they will hit that Kodak moment, right? Mm-hmm. And by transformation, what I kind of mean is if you are going to take on these tech fins and win the battle against those tech fins, there are really four or 5 major outcomes that those transformations have to achieve, right? The first one, and I just run through these very quickly, right? I mean, the first outcome is around convenience, right? And as far as convenience is concerned, what really frustrates me a little bit even today is that most people that are the thought leaders in this space are still talking about convenience from the perspective of being able to do something in 1 click or 2 clicks, right? Whereas from the perspective of the customer, convenience is much more, in my view, about instant fulfillment. That is what the tech firms do so successfully, right? I mean, if I apply for a loan, I want that money in my account within a matter of minutes, right? I don't want to be waiting for days and weeks for this to take place. I mean, even today, if you're transferring money, I can do it from a bank like DBS. I can transfer money from Singapore to the UK. Money lands in my account in the UK in less than 5 minutes. Whereas if I try to transfer money in Europe, it still takes quite a long time to make that happen. And it's a really clunky process if I've got to do things like change my limits, right? So the first piece is this thing around instant fulfillment. I think the second piece is the one that we've talked about a lot, right? It's about beyond banking. Folks are no longer interested exclusively in banking for the sake of banking. It has to facilitate the core need that they're trying to solve, right? So I think those banks that turn around and say, look, I'm only going to restrict myself to financial services and I'm actually going to deal with this by participating. I think you're right, Pal. They will probably see Kodak moments in parts of their business very, 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 very rapidly, right? Because other folks are providing a much better quality service in that space, right? And then the others are more obvious: costs. You look at the banking industry, they're at least 10 to 15 percentage points out of whack in terms of cost income ratio if they're truly going to be competitive, right? So they really need to be able to address costs. The area where they, I think, do better than most other folks, which is a strength for them, is the whole thing around security and regulation, right? I mean, banking infrastructures, architectures do tend to be secure by design. The regulators have put particular attention on that, so they made a lot of progress. So I think that to my mind would be the fourth one. And then the last one is this whole thing around data, right? Using data to drive revenue in the kind of way that the tech fins have done, which is, and then I need transaction activity, right? If I'm not seeing what that customer is doing across the entire gamut of the problem that they're trying to solve, then I'm not going to have the insights I need in order to be able to provide stuff to them. Now, we know, we've seen, I mean, you just look at DBS's annual accounts, right? They set out the premium valuation that they get because they have transformed to be a company that's delivering on those outcomes far ahead of most of their peers, right? I mean, they've got a substantial valuation premium because they're actually doing it. I talked to you about SBI. There are a number of other clients around ASEAN as well that are well down this journey that are now being successful against the Paytms and the Alibabas and the others of the world because they are providing what their customers are actually looking for, right? And I expect to see that happening, I think, in the US as well, because again, to your point, it's not just the fact that Square is valued at $100 billion, right? Just look at the revenue from the payments business that they do today. That is all revenue that was traditionally done by the incumbent banks, right? So this is market share that the incumbent banks have actually lost to folks like Square, right?
No, absolutely. But you said that you are positive and excited about the trends that are coming forward. So share a bit more about that.
Yeah, I mean, where I am bullish about this, like I was saying earlier on, right? The banks that have aggressively transformed in order to be able to, simplify their organizations and create the agility and the flexibility to achieve those outcomes that I was mentioning earlier on. We can see that those banks are not only holding their own against these large tech fins. In a number of instances, they're actually winning market share back. I mean, go back to that SBI example, there is more traffic on the Yono platform in India today than on any other platform with the exception of Amazon, right? So they've gone from being in a situation where they could have lost all of this business to the likes of WhatsApp and others, but they've been able to not only hold their own, they're actually winning, right? So I think there is a recipe to make this happen. I think there's a recipe to make this happen within a very sensible timescale, because these programs have all been run, on timescales which are within, between 18 months to 3 years, with capabilities coming out to market on 90-day type of windows, right? So it's not where you're waiting for 5 years before something happens, because in the world's going to be very different in 5 years, right? That sort of program is never going to be successful. So the time spans are sensible, and the biggest thing is the investment is sensible. These guys are not having to spend billions and billions of dollars making this happen. I mean, if you look at the banks in Asia and how much they spend as a percentage of revenue on their technology, it is a lot less than, for instance, the US banks, right, who spend more than anybody else. But then if you look at where those banks are actually making those investments, they're quite different from what happens in Europe, for instance, or in the US, right? They're not spending money on back office systems, on core banking, on middle office, other than when, those things really need to be transformed to support what they're trying to do as far as their front office platforms are concerned, right? So their governing strategy is about hollowing out the back office and making services available, right? So this can be done quickly and it can be done at lower cost. So all of that does make me optimistic that there is a recipe to make this happen. And if I may, there are 2 or 3 lessons coming out of it that I'd just like to emphasize, right? I mean, number one is these are chief executive driven programs, right? So thinking about it as a technology program that's going to be run by the IT department of the bank, I haven't come across a single one, Pal and Ville, where that kind of format has been successful, right? These have all been CEO-driven programs, right, where the CEO is spending a lot of time on the execution of the program, right? The second key lesson coming out of this is there has to be a seamless joining up between business and technology. Now, ultimately, if you look at all of these banks, their overriding philosophy is we're a technology business that's in banking, rather than being a banking business that is trying to use technology, right? So the garages that I was mentioning earlier on, every conceivable stakeholder that was responsible for a customer journey was in that garage and had to provide dedicated time to that garage, but only for 5 days, right? So if you were a regulator, you had to be there if you were going to influence that journey. So that, to my mind, is the second key point, right? This is really seamless between business and technology in order to. And then last but not least is the point I was making around designing these programs so that you're bringing capabilities out on very short timetables, right? So everything that you talk about around agile, flexible, etc., is very relevant to this stuff, right?
Yeah, actually, it leads to a fundamental, interesting question. Being a little bit derogatory, most banks today are still operated by, dare I say, grey old bankers who are focused on how banking industry used to be run. I know you're grey as well, Ville, but we don't operate banks at the moment. Right? So. I mean, that is one of the fundamental questions that I get involved in quite a lot. I mean, do you think, Likhit, do you believe that the banks will need to fundamentally change their business models and strategies to stay relevant in the future, and to do so as fast as possible?
No question about it, right? And it's I think that comes to bear in many ways, right? I mean, one is purely the kind of developer population, right? This is why I was making the point earlier on, which is, let's not kid yourselves that, internally you're going to be able to come up with the ideas and innovate in the kind of way that you need to, right? This is where you should really be taking advantage of the fintechs that have exactly the type of people that you're talking about and that are making great progress, right? So I think what the banks need to be focusing on much more is, how can I systematically look at what ideas people are coming about and decide which are the ones I want to go with. I mean, that's not going to be easy because there's just such a volume of these ideas that are coming up, right? So to be able to systematically sift through them and select the ones that you want to incorporate is quite a task. I think the other one is the banks, the gray haired people like you and me, can focus on, how do I really simplify the way to bring these folks on board so that it can happen very, very rapidly, right? Because if I'm waiting, like we said earlier on, 9 months to do it, the opportunity is probably passed by then. This is how fast these things are taking place. So I think certainly attracting the right talent, using the fintech community to be able to supplement the right talent is becoming key. But the other point I would also make, Paul, is banks need to really focus on who their customers are, right? And those customers are also now very different in terms of their requirements and their expectations. When you look at the age group between, say, 28 to 40, what they want today is quite different from what they wanted, when we were, or I was in that kind of age bracket, right? And I think the thing that's going to be somewhat frightening for a number of the banks, those folks are now becoming senior executives in corporate clients that are still driving profitability in the banking business, right? And this is what happened with Apple, isn't it? I mean, people got used to using the iPhone in their personal lives, and they then wanted to use the iPhone in their professional lives, right? I mean, they didn't like the experience from BlackBerry or whatever. And that's what's, I think, starting to happen in corporate banking as well. Treasurers are sitting there and saying, look, I'm very used to a certain type of experience when I'm a consumer in my personal life. Why do I have to have this truly horrible experience when I'm sitting here as the treasurer of a large company, right? Going back to the point you made earlier on, I want my banking to be anytime, anywhere, using the device of my choice, right? As opposed to what is being dictated to me by the banks.
Yeah. What do you think, Ville, sitting in a bank? Do you think all the old gray executives need to be fired and replaced by young, hip and trendy kids?
Well, I don't think they should be fired, maybe, but again, there's going to be some kind of organic kind of movement towards new kind of generations, of course. But this actually reminds me, a friend of mine and a former colleague of mine, Bo Harald, who is now already retired from active business, used to work for Nordea, he kept on talking about Mr. Same Guy, always saying that it is the same person who works at the corporate treasury or at the bank in the day, and then when they go home, then they go to their personal devices, their personal environments, but it's the same person with the same values and same preferences in both the office and home. So I think this example of iPhone that you gave, Likhit, is actually very kind of a good way of articulating that same thing, is that you expect the same level of convenience and ease of use in all of your points in life. And people are starting to realize this and making it a reality as well in the kind of moving into these more senior positions in banks. But maybe I'll just kind of summarize some of our thoughts on what we talked about before. I think this kind of, it's an interesting spectrum that we're seeing in terms of seeing the way financial services or banking in general will move forward. If on the other end of the spectrum, we have, let's say, the crypto lunatics, basically the ones who are saying that technology will solve everything, cryptography will solve everything. We do not need laws, we don't need regulation. We're going to figure this out ourselves. And then on the other end of that spectrum, we have the banks who are saying that, well, it's a regulated business, it's the law, it's always going to be like this. We don't need to actually do any of that crazy stuff because we have the laws protecting our business. Now, I think the ones who are able to find the middle ground between these two things, understanding why regulation and law exists, and you cannot do certain things unless you are compliant with the local laws. But at the same time, understanding that you cannot sit still and just wait for the technology to evolve and then come knocking down your door, because you need to understand that you need to evolve as well. You need to move away from the kind of basic things that you've been doing for decades and understand that technology moves forward. And the Mr. Same Guy, who is also your customer and now happens to be working in your bank, expect the same level of convenience and speed from everything we do. So yeah, that's just some of the thoughts that I got from this really fascinating conversation.
No, that's very well said, Ville. That's a great summary. I mean, I think Paul, maybe for your and Ville's podcast going forward, right? Two or three areas that we should, I would suggest you might want to explore, right? I think one is the whole financial model, right? I mean, people talk a lot about regulation, but they don't talk about the fact that most of the tech fins and fintechs that we've been talking about are going after revenue. They're not really bothered about their bottom line profitability. Like we said earlier on, they're not putting capital aside, and they're really looking to create value through market capitalizations that are in the billions, that are based on multiples of sales, right? If I'm a bank that's competing against that, that is an extremely difficult place to compete, because I cannot, as a bank, go after that sort of model, right? My shareholders are still looking for me to deliver a sensible return on equity, which requires profitability, right? So I think that is an aspect, or how do you deal with something like that, which is going to be quite important to think about going forward. I think the second theme would be in the vein of what is now keeping banking CEOs awake at night, right? I think it is personally the move up the value chain into corporate. There was always this kind of feeling that somebody who was a large corporate or a large investment bank or had those businesses, that, okay, it's fine, my retail business might get impacted to some extent, but I will still continue to make significant amounts of money out of my kind of corporate and my investment banking business, right? But you've just got to look at things like Robinhood and what Robinhood has done, to your point around crypto, right? You look at what tech fins are doing in the SME space. I can absolutely predict wealth management for mass affluent is also going to get disrupted, right? So any aspects of the banking business, guys, that are either underserved in the sense of poor quality of service today, or where the banks are making super profits, I don't think it's going to be very long before the tech fins and the fintechs have a go at those areas, right? So those should be the areas where we're certainly recommending to our clients, you need to get ahead of this game, right?
No, absolutely. It's a fantastic summary from both of you. Really nice. Some great ideas there. Thank you, Likhit. I think we'll roll those into future episodes, Ville. Actually, I just realized something. Ville, we forgot the joke.
Oh,
a joke for us.
You're right. I usually put it at the beginning, but I forgot that you do it in the end. But okay, let's do it.
Yeah, well, and unless Likhit quickly jump in with something, but if not,
no, I will defer to you, expert.
So, Ville, give us a highlight to go out on.
Not sure it's a highlight, but let's call it a light. But the way we're working towards a cashless society. I mean, in the Nordics, we don't barely use any cash anymore. Yeah. But one of these days, I needed some cash for some purposes, and then I was going to ATMs, and that got me really worried about my bank, because I went to like 5 ATMs, like I said, and in all of them, the bank said that they have insufficient funds.
Wow.
Yeah. Oh well, there must have been too many people taking money out, Ville, from your account.
Yeah. Maybe the fractional system doesn't work after all.
Oh, I like it. That was good. Well, thank you very much. Good joke. And Likhit, thank you so much for joining us on the show this week. Just before we close out, do you want to just share with our listeners, if they want to get in contact with you, talk to you a little bit more about what we've discussed today, or just pick your brain a little bit further? How can they easily reach you?
Paul, thank you. Oh, no, absolutely. So firstly, thank you very much for having me on. It's been a real pleasure. I thoroughly enjoyed our conversation. And if anybody wants to get a hold of me, very simple, my name, likhit.wagle@ibm.com. I'd be thrilled to hear from you, or you can connect with me on LinkedIn, whatever would be easier.
Fantastic. Thank you very much, Likhit, for joining us for a fantastically interesting discussion. I've really enjoyed it, and I'm sure our guests have as well. And with that, dear, fantastic, wonderful guests, without you, this wouldn't be a show. So we really appreciate you tuning in. We really appreciate you getting in contact and letting us know what you like, what you don't like. But most importantly, we're still really enjoying you hitting that like button, hitting the subscribe button, and leaving us comments so that we know what we're doing good and what we're doing bad. And as you know, the algorithm on all of those platforms. Really love the comments. So please keep them coming. Ville and I will be back in 2 weeks' time with another episode. We're heading towards Christmas, so not many episodes left of this season of Fintech Daydreaming, but we will be back in 2 weeks' time. We look forward to sharing some other insights with you then around the fintech and banking industry. But until then, this has been Fintech Daydreaming.
Thank you.
This is Fintech Daydreaming.